So I'm here with my friend Dan Greco. How friendly are we? He was at our wedding almost 31 years ago down in St. John.
Yeah, and a lot longer before that.
So anyway, we are here in Ridgefield Park where we both grew up at Veterans Park, and we thought this would be a great place for a conversation. Like I said, our relationship goes way back, and we know, love, and trust him. And Dan's the kind of guy I can hand him a client, and if he can't do the best job for that client because he doesn't have the exact right product, he'll put him in somebody else's hands to make sure that client is well taken care of. And he has done that before. He's done that with us. I trust him implicitly, and that's paramount with our clients. You know, we've been working together for a lot of years, and we've got that kind of relationship with our clients. We both have that long-term look at our clients.
Right.
Yeah.
Right. We pretty much say the relationship really gets started after the closing, where we stay friends and we give referrals and we talk you through. We're not a one-stop shop, the both of us, where you just come in and close the loan and then move on.
We're on multiple generations of clients together. So we've, you know, I mean, we've done business. We're on our third generation with some of the families that we've served. Talking about young people.
Yes.
What is some of the best advice you can give to somebody like Richie's age, my son's age, who hope to buy a home in the not too distant future? How do you set yourself up for that?
The biggest thing would be to make sure that your credit is good. So if you have any bills, make sure you're working on that and make sure you make your payments. The second thing I see mostly with young people, freshly married or just starting to look to buy a house, is the fact that they've run up too many credit card bills. Student loans, there's nothing you can do about. That's just the way it is. But be careful of your credit cards. That would be my biggest tip, which you see this country right now is in the biggest credit card debt we've ever seen. And even though they say the economy is good and everything else, these credit cards are coming due. They're 22% interest, and young people are getting really hurt with that, where they can't do anything in the future.
People who are self-employed.
Sure.
Talk about maybe some people who are self-employed might not be completely forthcoming with all their earnings.
Right. So you have to be self-employed for at least 2 years. As long as you file 2 years worth of tax returns, you're good. The biggest thing that we're seeing lately is instead of using the tax returns where self-employment people might not be so forthcoming to the government, we can now use what's called bank statements. So we take your bank statements and you're able to use that. There's many different ways to qualify as a self-employment borrower. You would just need to contact me and we would do the full analysis. So don't get hamstrung into thinking that there's only one way of doing it.
Something like 80% of millennials want to buy a house that's done.
Right.
But 80% of millennials want to buy a house that's done. So I always tell my clients, you've got more options if you're willing to put some sweat equity into a house, if you're willing to make improvements. The less than perfect house is the one that fewer people are going to go after, so you got a better option. So there is something called a renovation loan or a 203K loan, which is where they roll the price of renovations and the price of the house into one big fat loan. Tell us all about that.
Sure. So right now, if you're looking to buy a house that's completely done, there's a ton of competition out there. A lot of people I have pre-approved will put in an offer and there's 30 other offers on that house. Where the competition isn't so great is with a house that needs work. Here's where a 203K loan will come in. 203K loan means we will give you the money for the renovations that you don't have to pay back until you move in. So what'll happen is, say you buy a house for $300,000, but it needs $200,000 in work. So you would, in essence, get a loan for $500,000. While you're still living where you're living, the contractor will go in. You have to get the contractor. You go in, they do the work. The bank pays them. There's inspections throughout. And now, when the house is done, you have 12 months. It used to be 6 months before your first payment was due. Now you have 12 months. So 12 months for them to finish the work, and then you move in, and you move into a house that's not only done, but specific to your needs, your colors, your layout, exactly the way you want it. And it's become very popular. And the good thing about a loan like that is, now that the loan is $300 plus $200 for the loan, for the renovations, now you've paid $500, but because you just did all of this work, your house is now worth $600. So you're already putting $100,000 in equity right away into your deal. So it gets very confusing, but not really. You pretty much know that you can have a house that's going to be completely done, and then we can go over all the steps anytime you want.
Yeah, so I just a couple of quick things.
Sure.
So with the 203K, you don't make a payment on the whole 500 in your example. It was a 300 house with 200 in improvement.
Mm-hmm.
You don't make a payment at all until it's completed at the 12-month mark.
Well,
Or
if it's completed in 10 months, then you would move in. So the basic thing is, what they want to do is they don't want to have you paying a mortgage and paying rent at the same time, or paying your current mortgage. So you will not have a payment until you move in. But if you're young, buying a two-family house is a very ideal way to go, because right now with interest rates and prices and taxes, which is the big thing, taxes, you might have a payment that's $3,500, $3,700, and you say, "Dan, I'm paying $2,000 now. I don't know how I'm going to be able to make that." Well, if you bought a two-family house and rents, I just saw an apartment going for $2,800 in Ridgefield Park. So say you had that, and say you had a two-family house, and say you only got $2,500. Now your payment went from paying $2,000 or $2,300 a month for rent. Now, once you add in the income that you're getting from the two-family house, now your payment's only $1,000 a month. So guess what? You bought a house, you stopped renting, and your monthly outlay is $1,000 cheaper than what you're paying now. So don't ever underestimate a two-family. People say, "Well, I don't know how to fix things. I have a two-family house. I can't twist a screwdriver." I have a phone number of somebody I call. They come right over, they fix it, and that's the end of it. So that's a very, very positive way. Instead of leaving yourself mortgage broke, as we call it, at the end of the month, you will be getting a profit. And then when you go to resell it, you'll really have a leg up.
Or you hang on to it, you buy
Another house.
single family, and you keep both units as income, and it's a great option.
Sure.
I want to go back to the 203K, which also works in the two-family. Some examples of 203Ks that we've done, and one other way to use it that you taught me. So one, we had clients who found a picture-perfect house. It was a small house, but they really wanted a formal dining room. So their 203K was to expand the house. It wasn't to renovate anything. It was picture-perfect. But they wanted a dining room. They had the land space. They added the room on. Another way, a Streamline 203K can be used with housing prices and so much competition. The bank will only lend on the appraised value, 80% of the appraised value of the home. If you have a Streamline 203K, where the renovation segment portion of the mortgage is only $35,000 or less, they will appraise up to 110% of value of the house. So how can this be used? Let's pretend you're buying a house, it fails to appraise, so rather than the seller go to the next offer who can perform, you apply for a 203K loan and you buy yourself a new fridge. So the $1,000 you spend in the refrigerator will come under that 203K Streamline renovation loan, and now you can bump your appraisal up to 110% of value, and you can move on with purchasing the house.
There's many ways to skin a cat.
There are many ways to skin a cat.
What I tell everybody is, when you're young, you should just call, and both of us, we work for free. We don't get paid until you close.
We eventually get paid.
So call us and let's do an analysis, and that's the best way to go about it. Because what you're trying to figure out, and you're going to Google some of the stuff we're telling you. Listen, I'm older. She's not, but we're older people. We sit around at night. We don't do much. So call us and we'll have a conversation specific to your needs. We don't work for free. We get paid on performance. So unless we do a great job for you and accomplish what you're after, we don't get paid. But it doesn't cost anything for you to find out.
That's right.
Okay.
To know us is to love us.
If I was to do a bad job, or Maria was to do a bad job, everybody knows how these small towns are. Well, Ridgefield Park is a small town gossip times 100. So if you do a bad job, word is going to get out that you're doing a bad job. The reason we've been in business so long is because we take care of our clients.
I thought it was because I was good looking.
You are good looking.
I want to talk about one other weird niche loan that Danny can help with. And it's just one of many, but one of these specialty products that he can help with is a physician's loan. And it's strange in that somebody coming out of medical school with just a promise of employment, with just their residency ahead of them, can get a loan depending on the type of physician they are to become. And the price point, I mean, you can borrow up to $1.5 million with, depending on the lender and the loan, 0 down or 5% down. They qualify you by setting aside your student loans. And there's no private mortgage insurance, so you can get a 0 down loan and not pay that private mortgage insurance. Physicians, dentists, pharmacists. So
yeah. If you're in that field, that's a good way to look.
Yeah.
When you come to me, you get pre-approved from the beginning. You call, bankrate.com or 1-800-LOAN or whatever they're called now. They're pretty much just going to take your information over the phone and not really underwrite the file. So they're not going to look at your pay stubs. They're not going to look at your tax returns. They're not going to look at all of that. When you come to me, we do everything up front. But by the time you get to the deal, where the deal is started, you've already done 90% of your work. And the loan's already been approved. So we never have problems during processing. And the reason I did that was because I went to this company that have very, very competitive rates. You could call a 1-800 number and you'd be one of 100 files on somebody's desk. Where if you come to us or myself, like I said, we treat you like family.
yeah, and that's really important when you're in this kind of a competitive market. The realtor has to know that you are well qualified, and I got to be able to sell you to the listing agent if you're my buyer, because you're competing with a host of other people. If you're, I don't know the lender and you're dealing with some stranger and know they haven't run your employment or your credit or whatever, you are not a solid deal, and you're just not going to be able to compete for that house.
The worst thing and the biggest stress I've ever seen on people come to me when they're already in a contract and they're already in a deal and they wind up getting denied. Now they've already given notice on their lease that they're leaving. The family's all prepared to move in. And guess what? The hammer drops down and they're not getting the house. And that, let me tell you, is a very stressful thing that you want to stay away from.
Yeah. Now, seasoned agents aren't going to bother with you. They're not taking you to look at a home unless you are pre-approved. And the listing agent, so as a listing, which is most of our business, when the offers come in, the first thing we do is pick up the phone to the loan officer to find out how solid the buyer is. When you can't get somebody on the other end of the phone, or they really haven't been vetted,
right,
they're not somebody that's
And to take that a step further, when Maria makes an offer on a house, after she calls the listing agent, I always call the listing agent. And I say, here's my number, you can text me on the weekends, I will respond to you. And that goes a very long way.
It really does. Not having, as a listing agent, trying to track down the buyer's lender. Here's this guy picking up the phone going, hey,
Yeah.
I'm Mary's lender.
Yeah.
She's solid. That's what you want to see in a deal. We boring you? No.
It's interesting. Yeah.
It's interesting. I just want to say thank you so much.
My pleasure.
For coming down to Veterans Park.
Yes.
And having this conversation with us.
Yes.
I think it's very beneficial for lots of our people. So.
Yes. I want to just talk about this field here. Maria and I went to high school.
No, I went to Immaculate.
Oh,
You went to high school.
I'm sorry.
My husband went to high school.
I'm sorry.
All right.
Maria's partner, Rich, and I met right here on these fields back in the 70s. And we grew up together. That's how long we've known each other. And it's just but you hung out on these stairs.
That's right.
With us.
Yes.
So We've been here since we've been in our teens, and we're still together. And the only reason we're able to do that, and the only reason we're able to do it in a town of Ridgefield Park, is because we take care of our people.